All right. Good morning, everybody. So it's Rate Super Thursday between European central banks and Bank of England doing rate hikes, or excuse me, doing rate events today. Whether or not they hike, it doesn't look like any of them is projected to hike, but there was a surprise hike out of, I don't know, like New Zealand or something. So anything can happen, but we'll be getting like Christine Lagarde and, the global versions of Powell today. UK up more than 1.75%. Small caps right behind that 1.5%. China up more than 1.25%. And these are really good starts to the day, being up this much. The idea, though, is whether we can keep it, especially after the fantastic move from yesterday. NASDAQ near 0.5%. Below that, the Dow still up more than 1/4, and S&P still up more than 1/4. So, it's not that bad. The small cap move really stands out. If we think back to January of this year when we had that dash for trash short covering rally, kind of left for dead stock that came back to life, and it kind of just kicked off the new year, right? And then it bled from that into the monsters of tech and kind of an all around old tech rally. And so there's a lot to unpack with the Russell being up so much this morning. And certainly there's a lot of write-up on that FOMC yesterday. I was reading through Spot Gamma, and they were calling it, like a historic, unprecedented FOMC yesterday, which is why we had such a blowout move off of it, which then continued, even in the Globex. Today we're getting some job numbers, and we are getting some global numbers that are likely to weigh in on our day. Let's flip this over to we see the right time. I broke it. European Central Bank press conference, 8:45. Then we'll get some US data, including the 4-week auctions. So really close up in the front end. Those are worth watching at 11:30. And we're going to get some data out of Japan tonight worth keeping our eye on. I missed my entry on a bond move right before FOMC. I was trying to get filled on a call, and I didn't get filled. And man, that TLT ran. Whew. So risk parity is dead, right? We had stocks and bonds both ripping to the upside yesterday. And the question is, when is this going to diverge, right? And on the other side of that, if we are now transitioning, then we're going to start looking for bad news to be bad and good news to be good. I know that might sound kind of funny, but for the longest time, the market was looking for evidence that all of this tightening had the effect of not just lowering inflation, but showing the Fed that their tightening was having an effect. And the easiest way to gauge that is through the job numbers. So we were looking for, unemployment numbers to increase, to show all kinds of job numbers that, that there was less availability, lower wage expansion, the whole works, everything related to jobs. And every time we got bad news, the market would rally because it would reflect that the Fed was accomplishing its goals. But at some point, this is going to swap, and bad news is going to be bad news, because the narrative will swap from, hey, the Fed is working to accomplish its goals, to, hey, the Fed over tightened and now they're breaking stuff and policy is too high and it's too restrictive and they need to cut. Oh, so, we want to listen for that transition and the way that who's speaking and what they're speaking on. That's what you want to be listening for. Still pricing in 5 rate cuts in England. And even though they're pricing it in, they're I guess it's right, they are there. We'll let it ride. So in spot gamma, they were talking about 5,000 on the SPX. There's already some optionality up there. Now they did mention that it could be just a little bit of some trades, hedging activity, baskets, that sort of thing. But once you start getting optionality up around that area, you see right here, some of that gamma at 5,000 may be box spreads from, neutral structures, market mechanics. It sets the foundation for market structure to migrate to higher strikes. And 5,000, I mean, wow. So full house today, 8:15, 8:30, 10, 10:30, 11, 11:30. All day today, we're going to be getting data. All of this data has ramifications on what we were just talking about. Manufacturing sales, retail sales, business inventories. And then we got auctions today between the 3-month, the 6-month, 1 month, and the 5-year. We still can't use the market maker move this morning. One more day, right? We get through tomorrow. By Monday, when we come in, the market maker move tool that we use should be functional again. So even though we see this up here, it's not true, right? Because we can see here that the front series is not greater than the next series out. Therefore, the market maker move is not functioning right now. It's the whole issue with the March contract being active, but the December contract still being here. And that's what's screwing with that market maker move thing. So it's okay. We just, we can function without a market maker move for a week. No big deal. Volumes are elevated though. A little bit of this is because firms are running out of time and they need to roll their positions. So, their carry trades from the December contract to the March contracts, they're just rolling it. But that roll still shows volume, right? And so we are seeing that volume. But if you were to bring up open interest, for an example, then you get a better idea, because we are looking at the futures. There is open interest, just like if we were looking at options contracts. So we can keep track of that. Either way, this is a great amount of volume, even if it is roll volume. And the subtle thing or the sneaky thing inside of that is that there could be just, trading volumes in there as well. We'd want to use something like a footprint chart or, on Thinkorswim, maybe monkey bars to see that volume better. We're above the call wall, which is a little interesting. We'll very likely see that rolled up today. Think of the call wall as where they would sell their calls. They'd monetize those calls. And it makes sense that when we ran up into the call wall that we would see that kind of trading activity. And if they're in there selling calls, well, that's a negative pressure against the market. It's not like it's some, quote, resistance. It's just an area where we would expect a lot of selling. And the fact that we were able to actually push through that, and now that we're above it, well, now what? We're above all that spot where they would be monetizing those calls. Well, it's very likely going to be rolled up, and we're going to see some of that get taken off. Remember, this is triple witching week, so there is a lot of stuff expiring this week. Some of the numbers I heard is 30% of all of the options that are out right now are going to expire this week. That's a lot of options, especially when you're talking about something like the SPX. $2.1 million puts traded yesterday, 1.8 million calls traded yesterday, and that was light. That was a little bit of light trading. Just to give you a gauge, that's 3.9 million contracts traded on just the SPX. That's not the SPX or the XSP, which is just another version of the S&P 2, and then the ES and the MES. All of those different contracts that all represent the S&P in various forms. And it was light compared to what it normally would look like. We do have an MDP this morning. That's a missed daily pivot. It doesn't really impact us today, but we had one yesterday, and that does impact us today. And we continue to carry this bullish narrative as long as we're maintaining above that daily pivot point, especially without having hit that pivot point. We are also at the ADR half already. We were there last night by like 8:30, 9 o'clock, something like that. We got there pretty quick, and then that kind of stalled us out. Why? Well, because that red line is the average daily move, right? ADR, average daily range. What do we do day after day? What have we done for the last 21 days? We hit that red line. Or the other red line. Or both of them in the same day, because we can do that too. So it's not a surprise that we did what we have been doing over the last 20 days. We went to the red line and we stopped. The thing is, it's been sitting there digesting that move all night, and now we could actually just complete the move and go to the yellow line. The yellow line is the full ADR in one direction. The ADR right now is 75.75. It's 0.75%. So from Globex Open, if we were to move in just one single direction instead of half and half, then that would be 0.77 in one direction, right? That gets us all the way to 4,800. I'm just going to round that just a little bit, right? Because it's close enough. So a full ADR, 4,800, that's pretty fantastic. And if we get to 4,800, we might as well overshoot it just a little bit and get into all-time highs, right? So 4,808 and a tick, all we got to do is beat that. There is a few analysts out there suggesting that we're going to maintain this bullish bias into the end of the year. And if you remember January of last year, like January 3rd, market opened and it was just go time. And we just started ripping all through January, part of February. got a little weak around March because of the banks, right? And then the FTC collapse, or whatever that Sam Brinkman shenanigans, and then they had to come in and save the banks, and we went rallying back out of that again. The key though to this discussion is that January rip, and it was like everything was on the rip to the upside. Short covering rally and trash, growth, value, it didn't matter. Everything was going. I think this January is going to be the opposite, that we're going to have that swell of breath through the rest of December, and we get into January and we're going to, I don't know, shift and give it all back, give part of it back. We got our levels either way. 4,800 for the full ADR, 4,780 for the ADR half. And another little note with these ADRs, if you get to one side very early, it opens the door for you to go to the other side. So it can't get any earlier than, like 9 o'clock last night. We've been at this level multiple times now. It would not be a surprise at all for us to retrace to the other red line. 47.40, just rounding it for easy numbers. And if we cut through that, get through the daily pivot, we could expand to 47.25, which would be the full ADR to the downside. Kind of gives us some levels. If we can break through our own Globex high, then 47.92, and then the ADR full, and then 48.08 before we get to 48.04, and then 48.08. Look how far away we are from the weekly pivot point, which is another reason to believe that we could just drop back real quick, tag that lower ADR line, and maybe get, like a half back rebalance, because that's a pretty good size move. It's hard to believe that we're going to expand even more today from here. We're already building out a megaphone pattern on this, and we've been hitting our head there pretty solid. Yesterday's halfback would be 47.30. The cog line 47.31. It's close enough. $47.64 is the 0.75% mark on that quant level that I just drew. It's also the previous day's high. So really nice how things line out like that. We can drop all the way down to 47.30, and we still would have a bullish market. It still wouldn't be bearish. And 47.30 is lower than the daily pivot point. And it's lower than my measured move of this 100% line. So yeah, if we retrace, it's not going to be bearish unless we break below 4,700. And even then, there's an argument that, it wouldn't necessarily be bearish at that point. I'm not saying it owes us a pullback. Not yet. We haven't looked at enough stuff to say that it owes us a pullback. $10-day, 30-minute volume profile, and there's nothing here. There's nothing to catch us on that move back down because we moved up through there so fast we didn't leave any structure behind. 46.26 is the pivot point. It's a long ways off. We have a new point of control from yesterday. It's basically at the 4,700, so that's, not going to be helpful unless we really sell off. And the weekly expected move. All right, so we had been trying to do good, right? We had multiple weeks where we were actually staying inside the range. Well, that's done, right? But 8 out of 10 is what it's supposed to be. And we had 3 good weeks in a row where we closed inside the box on Friday, so pretty good. This week isn't over. We could, make our way back down inside of that box. I don't see that happening at this point, but that's the idea. We're supposed to close in that box 80% of the time. That's 8 out of 10 weeks. We are almost 2% above the 10-day moving average. And the 10-day, it has value to it. It does have merit to watch that 10-day. But the 10-week is really the one that I keep track of for overbought and oversold. Now we can see that the market has been more than 2% above the 10-day many times over the last few years. Even last year, when we were, in that quote bear market and dropping all through 2022, we were above the 10-day moving average, more than 2%. So we're not overbought. It doesn't owe us a mean reversion move just because of how fast we moved yesterday. It's unlikely that we will get another, 0.5% or 1% move to the upside today. That is unlikely, but it's not unheard of. And this is showing we're not overbought. We're getting there, but we're not there yet. The bigger one, however, is the 10-week. So I tend to try to keep the COVID drop off of the chart just so that we can see some perspective on everything else. Right now, we're more than 5.25% above the 10-week. That is getting us into overbought levels, extreme levels. And it's very close to the point where it owes us a pullback. Now, things can stay overbought much longer than we would have expected them to be. So, we could set some new record and, continue to go to the upside. But I would caution that even this high that I have back here, that was when from the March lows of 2020, the COVID lows, when we come ripping out of there, you know, we came out of there so fast that this thing was registering 8% above the 10-week. Okay, I mean, it happened, so it's there, it's a print. But I'd say we take that one off too, because unless we get, some kind of revisit to some extreme measure like that, where we shut the entire world down and then we open it back up and come ripping out of it, hard to see it an 8% move. But we still have 6.5. So 1% more above that 10-week, and then we would be setting new levels, record levels. It's not something I want to do. I don't want to set records, right? I don't want new stats. So I would say we're really close to a bit of a pause. Now remember, this does not mean that we're going to dump. We're talking about how far away from the 10-week we are. And one thing that we can do for the 10-week to catch up to us is just stop going up. That doesn't mean we have to go down. If we stop rising, the 10 will come to us, both the 10-week and the 10-day. If we want to reset that faster, then we would move towards the 10. And that would, of course, get us back to 0 quicker. Using pure price without even using, like moving averages for technical analysis or anything like that. We set that equal high. That gave it a chance, a warning. And then that low right there was kind of key. So once we broke that low and we failed to set an equal high, that got us started for a reversal. We were just in a topping pattern, right? We were in a topping pattern. It was holding. We had equal highs. We had a higher low. Everything was great. This little bit right there isn't enough to have called a lower high, but breaking that low and getting a lower low was 1. Then we failed to get a matching or an equal high. That's 2. And then we broke that low. That's 3. Right? So if we were aggressive, that break would have been a short trigger. Without it, then 4, failing again to get an equal high, and instead setting a lower high, can be a short off the highs. And now we've got a little bit of a misdirection. We didn't come down and break that low and set a new low. So this needs resolved. If you were short from here, then you're getting challenged now. Still not out of the game yet. And this higher low is concerning. Still, if we break that pivot point, we've got a full confirmed reversal. And that's just using pure price, where most analysts will mix the two together, right? They'll use some form of indicator or tool, and they'll use some form of pure price method. We've got a tangled 10 and 20. But we do have the cross, right? So you get price back below that 10 and 20, and we get the 10 back below the 20. Then there's your pure price and your moving average or your technical analysis combined. By the time we got through price and then 10 got through the 20, we would already be below this pivot anyways. And everything still resolves around this low, 47.68. Got a lot of room to the downside. So, if you're a little unsure, you can be patient and let it break first. There's no reason to try to short it before there's a good solid confirmation. But aggressive traders getting in across the highs risk less money. You pay for confirmation, right? There's a lot of companies that do those levels too. I've been getting emails from this newer company, or at least it's new to me. I'm sure it's not new. Methor Q. It's an odd name. There's how you spell it. Menthorq. Menthor Q. They got a free email that you can get that has levels and on the SPX and the NASDAQ. All right, so what do we got today? Solar up the most, and regional banks, metals and mining, gold, airlines, energy again, bonds, semiconductors. I guess it's easier just to say what isn't up today, rather than going through that monster list. The things that are not up today, the VIX. Yeah, imagine that. So really, you could swing at everything today, anything. So this leads us to my alpha protocol. We don't get a chance to do this very often. And after yesterday's move, I certainly wouldn't expect it today. But this is the visualize tab, and I set it to index watch. Normally you go in here and you pick your index. We'll just set it to S&P 100. All right, so it's an advanced decline line. Nothing spectacular about that. Advancing issues minus declining issues. You could do that. This actually has the capital with it and volume. So during the day, I look at how many issues or how many companies out of 100 companies are advancing and how many are declining. If this number gets above 95, I start getting ready to run Alpha Protocol. The Alpha Protocol sounds like, oh, gee, what is that? That sounds cool. That's because I named it, and you name things, you can call it whatever you want. It's a basket trade. I really considered it once I learned what basket trading was and how the institutions and the algos basket trade. I thought, well, why can't we basket trade? Everybody else does. So I put my own little basket together. When activated, you buy everything in that basket. Do it with stock. You could do it with options. You can do it with both if you want to. Doesn't matter. All long or all short, if it's, 97 names out of 100 are all going down, then, short it rather than buy it. Usually when the protocols are activated, you'll get like one name that is a little turd not doing its job, kind of not really participating, you can notice it quickly and just kill that trade, and all the others are on go. It's not often that I get to activate the alpha protocols, and I'm bringing it up because I want to encourage you to think about what your protocols would be, what your approach to a day where it's going to be one of those rip your face off rally days where we expand to 2.5 or 3%. Now, look, I don't think we're going to get one of those, especially after the big move that we just had yesterday. But you know, the idea behind this is that the more people sound like me, who says, I don't think it's going to be one of those rally days, and then they try to short it, and they're caught in the squeeze, and then it just keeps going up and up and up and up. We've seen it happen before, right? So while I don't think today can be one of those rip your face off rally days, all the sectors are up. Everything is up this morning. And sure, you know, it can dump, especially with the fact that there's still a lot of economic data coming in. It could dump. But when all 11 sectors are up in the pre-market, growth is up, value's up, tech, biotech, banks, pot, EVs, China ADRs, penny stocks, short squeezes, everything's up. So what is your protocol? And when do you know that you're ready to activate it? 95 is a good start. When it gets into the 95 area, I start preparing to activate my protocols, and 98 to 99 is when I kick it in. So as you can imagine, it's pretty rare to see that number. And I like it in the daytime, in the morning section, not the afternoon, right? If we hit that high and it's already 2 o'clock, I'm not really interested in activating it at that point. So on a day when everything is running, you can throw a dart at a barn. You don't really have to worry about missing anything. So when you are considering what names will be in your basket of stocks, high beta names are, you know, usually the way to go. Things with very liquid options, by the way, too, is kind of a bit of a criteria that I like to use. Has to have liquidity, right? They were talking about Apple yesterday as a market cap bigger than most stock markets around the world. There's only 6 stock markets around the world bigger than Apple itself. I mean, that's mind-boggling, right? So we're really close on Apple to this 198.23. And we can see in the pre-market, it made that. So we've got a new all-time high on Apple. This goes back to Investors Business Daily, where they talk about, you know, strong growth names, runaway names, not growth, take that word out, just strong names that continue to go and go and go, and how traders won't buy it because they're at the highs. And so they sit out and watch something just continue to run and run and run, and they're not in it because, well, it's at the highs and I don't want to buy it at the highs. This is IBD's 50. It's the top 50 names out of all their scanners. And I'm just going to set it on a monthly for a second. And sure, some of these are, you know, bottom fishers. The chart on the left is log, and the chart on the right is not log. But it's the same chart, and it's the same time frame, monthly. There's a method to my madness. There's a reason I'm showing this. When it comes to swing trading, I get it. We all want to get a deal. Buy something on the lows, buy it on a pullback, buy low, sell high. We got the bumper sticker. It's been ingrained into our mind. But analysts like Corey Rosenblum, point out, and O'Neill, and of course, Wyckoff, all the big dogs, that markets that are strong, that are breaking into highs, that are doing well, will attract people that want to trade relative strength. They'll pick the horse that is running the fastest and is the strongest, and they'll continue to do that, right? They keep cycling through into the strongest relative strength names, because what is strong tends to be strong, whether they use the Newton's law or, if they're using some other approach. So just because something is sitting at its highs doesn't mean that it's not a buy. Investors Business Daily, for an example, their preferred entry is 2% from a breakout zone. So something like Apple getting into its all-time highs, 2% above the all-time high is considered a buy zone anywhere within that 2%. Obviously, you don't want to catch it right on the edge of the 2%, but it's considered still in a buy zone even at that distance. Now, Investors Business Daily, where this 50 list came from, they don't really dig into things like the liquidity of the options, and things like that. So, you can whittle down a swing trade list like this so that it's not 50 names just by eliminating names that perhaps are too expensive if you're trading shares, or that are not liquid enough if you're doing the options. All right, so we got Amazon this morning, completely outside of yesterday's range. Yesterday's high 149.46. They're at 149.85-ish, kind of split the mid on the bid and the ask. So it's just got multiple names this morning that have this setup. It's not unique to Amazon. But yesterday's high now becomes our support. So if you're looking for this name or for any of the other names this morning that are up in the pre-market, look for them to fade back and test that high of yesterday. See if it bounces off that as a support level. And if we break down below yesterday's high, it's very likely going to be a trigger for a long play. Now, Meta is still inside yesterday's range. We got 338.37 for yesterday's high, and we're only at 335 this morning, 335 and a half, something like that. So we're well under that 338. I would not look at this as, oh, this one hasn't run as much as the others. I'll get into this one and then, carry the run. It's possible. But look, when you find a laggard like this, what I have found is that it's lagging for a reason, and that more often than not, it doesn't catch up with its peers. It's the first one to fall if we start to flip everything over and fall. So Meta might be a little bit of a bellwether this morning. When you go to the airport and they got that sock flag checking the wind, this might be that for us this morning, because it hasn't had the inside day breakout that the other FANG names have had this morning. Now, look, if it does run up the rest of the way and get that breakout this morning above yesterday's high, then okay, it's no longer our sock, or it's no longer that bellwether that we're looking for. We're not even above the halfway point yet. 335.50, and we're at 335. Even looking at the ask, we're at 335.46. So we haven't even managed to do that yet. It's very likely that we gap up in the pre-market, hit that as resistance, begin to fall, and that this might be the first thing to fall. Having said that, I don't think it would be the thing I would want to trade short. I would rather short something off of its highs rather than its lows. But if you're waiting for everything else to fall, and this does start the trigger, the chain reaction, then I suppose, Meta is better than nothing. Here we've got Google. This morning it's at 133.36. We'll just use the ask. 133. We're still inside of yesterday's range here as well. But at least this is red to green. So from a bullish standpoint, we are right at yesterday's open right now, 133.38, and that's what I just marked, 133.38. For an inside day breakout, we need 133.50. If we can get that, we'll try to get this gap closed. $135. I'm going to steal a penny. It's $134.99, but we'll just call it 135. So if we can get this breakout on Google above 133.5, then we'll aim for 135. That would be the calls that I would trade, right? The 135 calls. And again, this is predicated on the idea that we're going to keep our bullish posture, right? But Meta and Google still have not even managed to get that inside day breakout. This is like a micro TRB setup. It would be a mini cup if we did manage to make our way back up to the highs. Be a nice play, to be able to run it. I don't think I would try to buy 140 calls. You could try 137.5, but I like the 135s. They're close enough to get some benefit from the stock move and have some Greeks in there as well. Apple, we already talked about. It broke that all-time high and now needs to keep that, probably fade back down, test against it. Tesla, even with the recall news yesterday, it rallied back up and closed in the upper portion. It closed better than Google did yesterday. Inside day breakout would be 240.3, and we're at 240.7. So we are inside day breakout. Now, Tesla needs to keep that. It could fade down and tag yesterday's high. It could even fade down and touch yesterday's close for a gap close. But it needs to stop there, right? We can wick through a little bit, but it should not continue below that close. And the halfway point, interestingly enough, is yesterday's open, 234.25. It should not get that deep, right? In fact, triggering below this 75% mark would be a complete short for me, 137.28. I don't really like the idea of shorting from the hole, shorting from that low, but trigger by trigger, getting back inside yesterday's range, that's one. Getting to the gap close and continuing through it and lower, that'd be two. And breaking that 75% mark, that'd be three. Level by level, right? And of course, buying a put while we're still inside day breakout would be much better than trying to buy the put when we're already down to this level, right? But getting confirmation is expensive. If you trade short before there's any reason to go short or any signal, the trade is way cheaper and your risk is less. Dollar-wise, your risk is less, but it is more risky because you're taking a short without a signal to short. We talked about Amazon. Netflix, what a fantastic move yesterday, and we're continuing through this morning. So we closed at 480 and a little bit. I'm giving some, right? Close enough. But 481.25 is our line in the sand. We need above that. On the ask, we're looking at 482.40, and on the bid, 481.25. So, you know, a little bit of spread, a little bit of spread there. Either way, 481.25, that's the high of yesterday. So even the bid, at the very least, is right there. We could call this an inside day breakout on Netflix. That's a big bar. But that big bar alone doesn't even tell the whole story, because we went from, I'm going to, creative license here, from 445 to 480 in this move. And we got a lot of resistance back here, right? So a little bit of concern. With this inside day breakout, just triggering back down below the close of yesterday would be good enough, right? That'd be a good short. And look, be aware of the fact that even though we're talking about these shorts because of the idea of breaking back down inside the previous levels, it could be a short-term short, a couple of hours, maybe a day, and then tomorrow, be right back to bullish again. This isn't a talk about a long-term, 6% pullback in the S&P kind of thing. I'm sure we're due for something like that. Make no mistake about it. But this isn't that discussion yet. This is just an intraday trade. Microsoft, I had a nice rally up off of that low yesterday. Closed at 374.37. And we're at 374.97. So we're barely up in the pre-market. And getting to yesterday's open would be a really good start. Getting an inside day breakout even more so. Microsoft is not as bullish compared to everything else out there. Look at these higher lows. Tight range. Let's just use a linear regression line here real quick. It's the R line right here. Start on this fantastic looking doji. You can see the trend there. as ugly as it may be, we can even redraw that as a channel. It's not a very good channel, but automated channel, it does what it does. The main thing is to look at that line in the middle. It is showing the direction, right? The trend is there. In the bigger picture, as a scoop pattern or a cup, we would be looking to get back to 384 in a swing. But for today, just getting an inside day breakout would be a really good start. And this thing is struggling. Yesterday, we had that gap up, right? We gapped up, we closed this gap. And now we still have this gap up here to deal with. 378.91, but it dumped. Let's just put a 50% on this thing. 374.20. So it did close above the half yesterday, just not by much. I'd say if it's going to be bullish, you got to keep that. That'd be a good trigger to go short. Short-term stuff, right? 372.5. I wouldn't try to get much out of it. And NVIDIA is bullish this morning, along with the other semis. We're still inside day on this too. It didn't close well yesterday. Sure, it closed green, but we closed underneath that 50% mark. Right now, we're negotiating with that 75%. Coming into the open, it wouldn't surprise if we kind of fade back, test that close, get that gap close, and then focus on rallying back out again. If we can get that and rally back out, then we got this 50% mark back here. It's kind of a zone. It's right around 491. And then measured move 495. 496. Let's round up a little bit. I know it feels a little weird looking at all these long trades after such a huge move, right? But we've seen that before, where we get a really big move. And so everybody's saying, well, there's no way today can be another really big move. And they try to short it. And of course, all those shorts get squeezed and we get an even bigger move or an equally big move the next day. So don't fall for that trap. If we break our own Globex high, for an example, and we move to the upside, run it long. Don't even try to fight it. Just run it. Trade what you have, right? Not what you want. It does, doesn't it? Yeah, it has a history of fighting that level. The comment is that NVIDIA has a hard time with that 500. And for now, that is absolutely true. There's been a lot of books about all-time highs and 52-week highs. There's a couple of approaches on this. In Hit and Run Trading 2, for an example, they talk about an approach to trading the 52-week high and how after we set the high, we'll often pull back and digest, and we'll test it, and we'll pull back again before we finally get that breakout. It's an interesting read. From a pure price approach, this setting a higher high than this says we're still bullish, right? This is definitely a big, massive topping pattern, but it's a topping pattern that does not yet have a bearish tint to it. It did get a little weak down here. You know, we did set that lower low for sure, but we do also have that higher high. Putting it on a monthly really clears things up. I mean, just that says it all right there, right? Just a beautiful run up and now a pullback before continuing on. Madness. All right, everybody, be careful, be safe, watch the clock. Got a lot of econ coming through today, and you know, really just trade what you see. Don't think that it owes you a short today.